Opinions expressed herein are subject to change and not necessarily the opinion of the firm. Past performance is no guarantee of future results. The information presented herein is for informational purposes only and is not intended to provide personal investment advice. It is important that you consider your tolerance for risk and investment goals when making investment decisions. Investing in securities does involve risk and the potential of losing money. The material does not constitute research, investment advice, or trade recommendations.
And now introducing Mr. Keith Lanton.
Hi, good morning again, everyone. It's Keith. Hope everyone had a nice weekend. So, going to get started this morning, today, August 26th, last Monday of August. Summer continues to fly by, and going to get started today talking about following up from something we talked about last week, which had to do with timing. And last week we talked about the importance of when, as opposed to sometimes how or why, and going to talk about when some more this morning. So some things to think about, and this has to do with those of you who wake up in the morning and think about when is the best time to do many things or certain things. And going to speak about exercise this morning, and then I'm going to talk about a few other topics about when to do certain things, and perhaps when to undergo certain procedures, and you'll see what I'm talking about in a few minutes. So when it comes to exercise, there are certain things that are most beneficial about exercise in the morning, and certain things that are beneficial to exercising later in the afternoon, and you have to decide what is best. So if you're focused on losing weight, then exercising in the morning is best, because when we haven't eaten for 8 hours, our blood sugar is low. Since we need blood sugar to fuel a run or to lift some weights, morning exercise will use the fat stored in our tissues to supply the energy we need. If you exercise later in the day, your body is most likely using the energy that is in your stomach from the food that you have most recently eaten. In most cases, morning exercise may burn 20% more fat than exercise later in the day. Also, if you're looking to boost your mood, then exercise later in the day has scientifically been proven to be better. When we exercise in the morning, we enjoy the elevated mood that comes from exercise all day long. If you do it later in the day, some of that benefit is lost through the fact that you're sleeping through some of that benefit. Also, if you're looking to build strength, morning is best. Our physiology changes throughout the day, and the hormone, for example, testosterone, peaks in the morning, so you're able to build muscle better earlier in the day. Later in the day, you are better off exercising if you are seeking to have less chance of injury. Our body temperature is low when we first wake up. It rises steadily throughout the day, and it peaks in the late afternoon and early evening, meaning our muscles are warmer and injuries are less common. Also interesting, we perform our best later in the afternoon. So you're more likely to sprint faster, and you're more likely to lift more weight later in the day. In fact, a disproportionate number of Olympic records, especially in running and swimming, were set later in the afternoon and early evening than earlier in the day. Now, that takes care of exercise. Now let's think about the rest of our day, and let's start with the morning. What are 4 tips for a better morning? Number 1, drink a glass of water when you wake up. Keep in mind that when you wake up, you've already gone, in all likelihood, at least 8 hours without drinking any water, and you may have gone to the restroom once or twice throughout the evening. So your very likely scenario is that you are waking up mildly dehydrated. Second, for those of you who are coffee drinkers, don't drink your coffee immediately after you wake up. The moment we wake up, our body begins producing cortisol, which is a stress hormone that kickstarts our groggy souls. But it turns out that caffeine interferes with the production of cortisol. Therefore, early morning coffee, when we take it, that caffeine, which interferes with the production of our cortisol, could lead to greater stress and less benefits for that coffee. So when is the best time for that coffee? It is typically 60 to 90 minutes after waking up, once cortisol production has peaked and the caffeine can do its magic. Also, for those of you, who may feel a little down in the morning, if you're feeling a little down in the morning sun can give you a lift. The sun, unlike most light bulbs, emits light that covers a wide swath of the color spectrum. When these wavelengths hit your eyes, they signal your brain to stop producing sleep hormones and start producing alertness hormones. And finally, if you're under stress or you need some help in the morning, talk therapy appointments tend to be more beneficial in the morning. Research has shown that you have a better session. This goes back to cortisol, your stress hormone. But cortisol not only is a stress hormone, it is also a hormone that enhances learning. And what science has shown is during therapy sessions in the morning, when cortisol levels are the highest, patients are more focused and absorb advice more deeply. All this information I'm discussing this morning comes from a book by Douglas Pink entitled When: The Secrets of Perfect Timing. And I'm going to mention one other subject on timing, something that can have a significant impact perhaps on your life and perhaps on your loved ones' lives, or perhaps this is something you can share with others that you know. And this has to do with the timing associated with medical procedures. And what I'm going to lay out here from this book this morning are procedures that are done and can be done at the least optimal time. What if I were to tell you that if you were to have a medical procedure in the afternoon, that you are 3 times more likely to have a complication? Science has backed this up. Anesthesiologists in particular are most susceptible to errors later in the day. In fact, they are more likely to have an event at 3 p.m. than they are at 9 a.m. The problem from anesthesiology typically is at about a 1% probability at 9 a.m., and at 4 p.m. it is 4.2%. If you're going to undergo a colonoscopy, again, you probably want to have that colonoscopy before noon. In a study of more than 1,000 colonoscopies, it was found that gastroenterologists were 50% less likely to find a polyp later in the afternoon than if you had a colonoscopy done before noon. And finally, perhaps most alarmingly, if you're in a hospital, nurses, doctors, etc., hospital staff are 60% more likely to wash their hands and maintain good hygiene earlier in the morning than they are later in the day. As the day goes on, they get worn out and they are less likely to wash their hands, resulting in untold greater number of infection. If you're wondering when might be the worst time of day to do some of these procedures, the British did a study, and what they found is that the typical worker reaches the most unproductive moment of the day at 2:55 p.m. Obviously, everybody is different, but if you're looking for an average, that's about the time. Now, what can be done? This is something that we all should think about. What could be done to counteract this effect of being less productive and taking more chances and having more problems when you do things later in the afternoon? This is perhaps something of critical importance to anyone who's doing a job that involves risk. Perhaps you're trading stocks or bonds, and you're doing it later in the day. Well, one of the things that you can do, and it's found to be very effective, is to have checklists and procedures to go through that you do on a rote basis. This significantly cuts down the effects of fatigue later in the day. So, for example, if you're entering an order to buy 1,000 shares of Microsoft at a limit of $74.50, have procedures in place whereby you automatically repeat that order to yourself or to somebody else, or read it out loud, however that order is being entered, so that you consistently act the same in the morning, the afternoon, the evening, so that you are able to check how you are going about a task, and you are setting up systematic internal checks. Simple things like laminated checklists, whiteboards, paper forms, mounted wall posters, something on someone's desk, reminding them of how to make sure that they do not make errors. These things actually make a big difference. In fact, in hospitals and surgery rooms where these laminated cards and whiteboards and mounted posters were posted, what they noticed is that the mortality rate from operations were declined 18%. 18% when there was procedures in place to cut back on these errors that occur because of fatigue. All right, so I'm going to move on to financial markets this morning. Last I saw, futures were up significantly after being down in the overnight session. They were falling off as I was stepping outside here to make the call. So overnight, we have President Trump over at the G7, and he has been busy making comments. Initially, President Trump, as you may have heard over the weekend, saying that perhaps he wasn't strong enough on China with respect to the first round of tariffs, and the markets didn't react favorably to that in the overnight session. But since then, President Trump has offered an olive branch to China after his days of intense feuding and opened the door to discussions. Now, since those comments came out, China's foreign minister said he was unaware of any ongoing discussions, and futures have fallen off somewhat from their highest levels. When I got in this morning at around 6:30, Dow futures were up about 300, S&P futures were up 2,700, and NASDAQ futures were up 100. We're now seeing the Dow futures up about 160, S&P up about 11, NASDAQ up 42. We're seeing bond strength, 1-year treasuries at a 170, the 2 years at a 150, the 10 years at a 152, so just a slightly positive yield slope there. The 30-year at a 201. Also, President Trump with some comments suggesting he might be open to diplomacy with Iran. That's also helping sentiment this morning. The Chinese currency, the yuan, is at an 11-year low on all this talk and counter talk between the U.S. and China. We're seeing gold and oil relatively flat this morning. A couple of articles in Barron's. Barron's wrote an article on convertible bonds entitled, "As Uncertainty Rises, Investors May Find Refuge in the Defensive Attributes of Convertible Bonds." Barron's discussing that convertible bonds typically provide 75% of the upside and 50% of the downside of the stock market, something that may take on additional appeal given the volatility and uncertainty that we're experiencing in the markets currently. Talks about convertible bonds trading like stocks when shares are rising, but they have a built-in floor when things are going down because of the interest rate on the convertible bond, and that floor is good as long as there is no default. In 2018, when the S&P was down 4.4%, convertible bond indexes were flat. Even more interestingly, since 1973, converts have outperformed the S&P by 2.6%, and they've done it with a beta of 73 basis points, or 0.73%. So less volatility, greater returns since 1973. One thing to focus on also is that convertible bonds are mostly done in private placements, are only available to qualified institutional buyers, and therefore mutual funds typically are the best way to participate in convertible bonds. Barron's also talking about the weakness we saw on Friday with respect to concerns about trade, and they talked about how to prepare your portfolio for the worst when the worst is a real possibility. They talked about what do you do when you have a world where you've got potential tariffs leading to a slow to no growth world, as well as a world in which risk sentiment and the desire to take on risk slowly evaporate. Human confidence is something that seems infinite when you've got it, and it seems almost impossible to recapture when you've lost it. So what do you do in a scenario like that? One is with respect to your bond portfolio, you probably would lighten up on more risky bonds like high yield bonds, leverage loans, and move into more liquid short-term bonds, especially in an environment where the yield curve is relatively flat, by short-term CDs, short-term treasuries. Also, you might look at owning precious metals, particularly gold and secondarily silver. The article talks about the fact that if you're real worried about a slow growth to no growth scenario, that you might be thinking that you'd be looking at a scenario somewhat like Japan over the last quarter century, which has been an extremely poor performer. And they point out that not every stock in Japan has gone down over the last 25 years, although the indices are down significantly. And they suggest looking at some defensive names. And in the U.S., they talk about companies that pay a 2.5+% dividend and are still growing. They suggest names like J.P. Morgan and AT&T. They say that tech is not a good place to be exposed because of the overwhelming exposure to the trade war and valuations. Also, U.S. healthcare is another place that has other risks, but is not exposed to the intricacies of the trade war. And finally, what you might want to think about, the sector that's that has not been on investors' minds are foreign stocks and emerging market stocks, where the valuations are at their lowest since 2003. In fact, Robert Arnott had another article in Barron's in which he took a look at how investors can brace for a world where there may be lower returns, and he suggested very strongly taking a look at emerging market stocks, which he said are at valuations that are as cheap as they were at the bottom or the end of the global financial crisis. He said he's looking for 7% returns over inflation in emerging markets. Of course, that's not guaranteed. And he emphasized, what do you look for in terms of how much exposure you should have to foreign or emerging markets? And his conclusion is you have to ask yourself how much tolerance you have for what he calls maverick risk, or performance dissimilar to what your neighbors or your friends or your peers may be earning. And if you're willing to tolerate the different results than your peers, then you're more capable of taking on more maverick risk, and therefore you're more capable of investing a greater percentage of your assets in this environment in emerging and foreign markets. He talks about the fact that over the past 100 years, U.S. equity markets have returned 9 to 10%. He feels that that's an unrealistic expectation going forward. Part of those returns were the result of a dividend yield of 4.5%, and the other part was due to rising multiples. He points out that multiple expansion is usually followed by mean revision, so you certainly can't count on multiple expansion in his view. And you're looking at S&P dividend yields of around 2%. So his projection for U.S. stocks is about 1/2% over inflation. He points out, and I thought this was an interesting statistic, something to think about, that if you go back to the tech bubble in 2000 and you look at the 10 largest cap stocks back in 2000, 5 of those 10 stocks had negative returns since 2000. So 19 years, negative returns. An average of the 10 largest cap stocks in 2000, you'd still come up with a slightly negative overall return. In fact, only one of those 10 stocks has beaten the market since 2000. It's beaten it by about 1% a year, and that is Microsoft. His point is the disruptors get disrupted. Points out that in 2000, when we had the tech bubble, the company Palm had a market cap that was, at the time, greater than the market cap of General Motors. That's everything I've got this morning.
Thank you for listening to Mr. Keith Lanton. For more podcasts, please visit our website, www.lanternwa.com.